Welcome to the CRE Advantage. My name is Charles Williams. I'll be your host today. Today I'm going to give a commentary, so we won't have a guest today. But I want to take an opportunity to thank you for supporting our podcast. We have over 70,000 cumulative views right now, and that's a testament to the quality of the information that we're presenting. Apparently, you feel that it's quality information because you keep coming back and you're supporting our podcast. So thank you for that. Today is episode 12, and we're going to talk about something that many of you have probably thought about at some point during your working career. Today we're going to talk about commercial real estate as part of retirement planning. But before we get into our discussion today, I'd like to invite you to please subscribe to our podcast if you like this information, and then also hit that like button on our podcast. This shows that the information that we're providing is quality and it's something that you are truly benefiting from. But let's talk about retirement planning. Let's talk about commercial real estate. Let's talk about traditional investments that individuals generally make when they are thinking about retirement, and we want to compare the two. So I guess the question that many people ask me is, why invest in commercial real estate? In other words, what makes commercial real estate, that investment, better than an investment in traditional investments like stocks and bonds, CDs, and other things? Well, there's good and bad with both. There are pros and cons with both. And I think if you sit down with a financial advisor, they will be able to direct you according to what your circumstances are. But I want to give you some things to think about with regards to commercial real estate versus stocks and bonds. Traditional investments like the securities, stocks, and bonds, these tend to be very risky. Now, you might say, really? Because the government encourages you to invest in stocks and bonds. When you go to make your 401k elections, if you're working somewhere, the only options they give you are funds that invest in stocks and bonds. So if the government is encouraging you to invest in stocks and bonds, why would you say that it's risky? Well, you simply just need to go and look at the historical chart on the stock market, and you'll see that there is always some type of correction or some type of reversal with regards to stocks and bonds. Now, it's true that over time, investments in stocks and bonds tend to go up, but they also are subject to dips or corrections, and these seem to be cyclical. Now, the only problem with that is if you know that you're going to retire when the stock market is on an uptrend, then it's probably going to be a good investment for you. But how many of us know that? Most people don't. So if we're putting our retirement dollars into something, we probably want to have a certain amount of security in that the money we invest is actually going to earn money, at the very least come back to us. And it's hard to predict that with regards to stocks and bonds. No matter how much you gain when you invest in traditional securities, you're always subject to a significant loss or reversal. Another thing that's important to understand with regards to stocks and bond investments, or what we call traditional securities, they generally trade at significantly higher valuations than what they are actually worth. They use a measure or a metric called the PE ratio. Now, PE ratio is price to earnings. So the price of the stock versus what that stock actually earns. We do something similar with regards to commercial real estate. We use a term called NOI, and the NOI divided by the cap rate will give us the value of that asset. And usually that value is generally going to be a PE ratio, equate to a PE ratio significantly less than that of a typical stock or bond transaction. Stocks and bonds sometimes trade at 20, 30, 40, 50 times what they earn. Now, does that make sense to you? Does it make sense to invest in something that's so inflated that it's trading at a value that's 20, 30, 40, 50 times what it's actually earning? You can see why those securities are subject to corrections because they're not worth what you're investing. Now, so some people see or find that putting their hard-earned retirement dollars in an investment like that it is pretty risky. And so I'm not saying that don't do it. I'm saying get some advice on it, but I'm giving you something to think about when you invest in these traditional securities. Now, what's also interesting about investing in stocks and bonds is it's an unsecured investment. In other words, if you invest your money in that security and that business goes out of business the next day, there's no recourse to you. In other words, nobody's going to come and say, hey, we liquidated the assets of this business, and even though you bought it dollar for dollar, we're going to give you 10 cents on the dollar in exchange. Doesn't happen. The reason it doesn't happen because it's an unsecured investment. Your investment is fully exposed to risk when you invest in traditional securities. So many people who really think seriously about their retirement investment, they wonder if there is an alternative. Is there something that they can invest in that's going to give a reasonable return, and it's going to have a certain surety about it? And the answer to that is there is. In fact, it's funny that the majority of super wealthy individuals don't necessarily invest in stocks and bonds. They invest in real assets or assets that have real value. And that's commercial real estate or residential real estate. Now, why is that? Well, I mean, if you think about it, if I make an investment in a commercial property, that's something I can actually go touch and feel. I can go sit in the parking lot and observe that asset generating income for me. And I know that part of that income is coming back to me because, the rental revenue it collects minus the expenses, that's the profit. Part of that profit comes back to me. It goes back to my retirement portfolio. And if that property fails, if the businesses that operate in that property fail, the real estate itself still has value. So it can be liquidated, and therefore a portion of what I've invested in that real estate would come back to me in the absolute worst case scenario. Investing in real estate, commercial real estate, residential real estate, these are what's called a part of a fixed income strategy. In other words, what generally happens is you make an investment into that property and it's going to pay you back steady fixed returns. And so it's fixed income strategy. So just imagine that if you retired with $1 million in your retirement account and you want to get, you want to earn $100,000, $120,000 a year on that $1 million that you've invested, then you're going to invest that $1 million into something that pays 12% return, steady returns of 12%. Now you may say, well, man, that's a lot of money. What pays 12%? Well, trust me, in commercial real estate, if you're investing correctly, you can earn consistent returns of 12% or more. In fact, with equity platforms, most equity platforms, we use a metric called a return multiple. And in most cases, in today's market, that return multiple is either 1.7 to 2x times the investment. And that's based on a 3 to 5 year hold period, which equates to about a 20% internal rate of return. So what that means is that if I invest $100,000 into a project, at the end of that hold period, 3 to 5 years, I expect to receive my original $100,000 plus another $100,000. So I'm getting $200,000 out. Thus, the term 2x multiple, 2 times my money. And that's standard with a lot of investments in commercial real estate. But there's a downside to investing in commercial real estate. And this is probably one of the things that makes it very difficult for everyday people to make an investment in commercial real estate. If you want to be an investor in commercial real estate, sometimes it requires you to be the owner. Now, some people, they may be working jobs, or if you're retired, you don't want to run a commercial property. You don't want to rent the building. You're looking for passive income. And that's why the stock market is so attractive, because you can send your money off and hope that some of it comes back to you. And with commercial real estate, if you're a direct investor in commercial real estate properties, you're required to do a little bit of work. So it's no longer a passive investment. You have to, rent the building out. You have to make sure the building's in good repair. There's a lot of work to do as an owner, and it takes skill, time, experience to do these things. And most folks who are looking at investing as part of their retirement strategy just don't have the time or the desire to do that. Now, you may say, well, there's another way. You can invest in a real estate fund. Well, that's true. Now, and it certainly works, and it works well, because there are real estate funds that consistently pay 8, 10, 12, 20% returns, and have been doing so for years. There are many that are here in the area where I live, here in Texas, and throughout the nation, private real estate funds that generate very consistent, very good returns. The only problem with that is this. Most of those real estate funds are designed for the super wealthy. Now, isn't it interesting that the government, when they're helping you develop a retirement strategy, they make it easy for you to invest in some of the worst investments that are offered. These are stocks and bonds that are subject to the vicissitudes of the market. They go up, they go down, and if you're retiring when it's down, you just lost all your money. That's where the government encourages you to put your money. But to invest in stable investments like commercial real estate that has real property, tangible property, stuff you can touch and feel, oftentimes you have to make large investments into these entities or these funds in order to participate. That's why it's something set aside generally for those who are very, very wealthy. Well, it seems like I think retirees began to complain about this, and they decided that, or apparently it caught the attention of our federal government, and so recently some changes have been made by the federal government that makes it much easier for individuals like you and I to make passive investments in commercial real estate. One such change was done in 2012. Now, it wasn't highly publicized. In fact, the name of the law that came, or the bill that came into law, is a little misleading because it would appear on the surface it has nothing to do with real estate investing. But it changes the game completely, and it presents an opportunity that American citizens have really never had before, especially those who are not really, really high net worth individuals. The law is the 2012 Jobs Act. Now, what the 2012 Jobs Act does, it allows small real estate firms or small real estate developers to create a crowdfunding structure where they can go out and syndicate out parts of their project into small little bite-sized pieces. So now, as opposed to in order to become an investor in commercial real estate, you have to have a lot of money to go into a real estate fund, or you have to become an owner-operator yourself. You can now make a fractional investment in a project through a crowdfunding platform. And you can get the same returns that you would receive if you were investing in some of the larger funds. And so this crowdfunding platform has really leveled the playing field. So that's just one change that's been made with regards to commercial real estate investing. Now, there's another change that's been made for retirement, particularly for individuals who are business owners. If you are a business owner, you can create what's called a individual or a solo 401k. Now, what's really, really interesting about a solo 401k, and I would encourage you to check with your investment advisor or your retirement advisor, or certainly look up some information on this. But what's really interesting about a solo 401k is, unlike other retirement vehicles that require a custodian to manage the account, you can essentially serve as your own custodian. So you can control where your investment dollars go. So if you want to invest in a commercial real estate fund, if you have enough money to get into some of the larger funds, you can do it directly yourself without going through a custodian. Or if you want to invest in fractional investments with developers and operators who are building certain buildings, you can do that. Or if you want to invest on a crowdfunding platform, you can do that as well. And so the playing field has now been leveled. Investing in commercial real estate used to only be for the super wealthy or people that had significant assets. Now, everyday people have an opportunity to invest in securities like these, and these tend to be a safer investment. Now, why is this so important to me? Why am I talking to my audience about this? Well, one of the things that we've tried to do is educate our listeners, our audience, on commercial real estate. The first thing we wanted to help people understand is that commercial real estate is financed in a variety of ways.
Yes.
Good news?
Great news. I just closed my first commercial real estate deal.
I thought you needed years of experience to do that.
Not if you attend the PRC School of Commercial Real Estate Finance. It's affordable and convenient.
So you're saying in just 3 months, I can have a commercial real estate finance career?
Yes.
Pioneer your future at the PRC School of Commercial Real Estate Finance.
Most people, when they think about financing commercial real estate, they only think about going to a bank. Whereas one of the things that we've tried to do is expose our audience to the plethora of financial resources that are available for financing commercial real estate. We have insurance companies, we have pension funds, we have private debt funds, we have investment banking groups. There are all kinds of methods for financing commercial real estate. Now we really want, now that our audience has been exposed to this, we really want to start digging into how deals are put together and how you as an individual can participate in these deals and earn some real income, fixed income, that's fully secured and collateralized. Now, we're very passionate about this here at Pioneer Realty Capital. We really want our audience, we want as many people as possible to be able to participate in something that we've seen has built real wealth for individuals. Certainly, personally, I can attest to the fact that it's had an impact on my life. And it can have an impact on your life as well. Now, one of the things that we've done here is we have a huge pipeline of deals that are coming in. We work with commercial real estate developers who develop multifamily projects, student housing projects, retail centers, hotels, and these projects do very, very well. We pride ourselves in picking out the bad ones and getting rid of those and really embracing the good ones for the benefit of our capital partners. Now we've created a platform so that individual investors can participate on that platform. It's our Pioneer Realty Capital crowdfunding platform. If you want to view the platform, simply go to www.pioneerrealtycapital.com/investors, and there you'll see our platform. Now, in order to invest on our platform, you have to be an accredited investor. And so now there's some information on the website that describes or discusses what an accredited investor is. Many people are accredited investors, but they don't realize that they are. But if you are, then you have a tremendous opportunity that's been created by some of the recent changes in law that now allow you to participate in projects that are happening in your neighborhood. One of the things that I used to ask people all the time is, where are you going to put your money? You're going to put it on Wall Street, or you're going to invest on your street? It's better to invest on your street or in your area or your neighborhood or your city or state, where you can drive by and see that investment generating income for you. You know that as people visit or patron that particular establishment, that part of those dollars are coming back to you and are funding your retirement. So now you have a tremendous opportunity to participate. And if you'd like more information about our crowdfunding platform, certainly go to our website and check it out, or give us a call at 682-518-9416, and we'd be very happy to kind of walk you through the platform and show you how this crowdfunding site works. This episode today is really all about getting you prepared to go into 2020 with a strategy to fund your retirement. Put you in a position where you can participate in the booming real estate industry. I know if you're in a major city, you're seeing the growth all around you. We will have other episodes where we talk about the reason for this growth and why we're seeing this boom. And what part of the cycle are we in right now, and how you can protect yourself as an investor in the various parts of the real estate cycle. Everything in this nation is cyclical. There's going to be a boom, and there's certainly going to be a bust. But if you position yourself correctly, you can make money no matter if there is a boom or if there is a bust. And certainly we feel that we can help you to do that. We've been through a couple cycles here in this company, having been in business more than 17 years. But if you'd like more information about this, please reach out to us. If you have comments about this commentary today, please write those comments in the comment section below. If you have questions, please put those questions in, and we'll be happy to answer those questions for you. But I want to thank you today for joining us for this episode number 12, and hopefully we'll see you soon. And don't forget to subscribe to our podcast, and certainly don't forget to like it. That shows that you are supporting us. Thank you very much, and we hope you have a great day.